Good afternoon, everyone. Thank you for joining us today. Really appreciate it. I know that a lot of people are still kind of funneling in here. We're going to give it just another minute here, and then we're going to get started. If you guys have any questions on the webinar or on, shorting a stock or anything like that, please feel free to drop it into the chat, and we'll make sure to get to it throughout the webinar. So hold tight with us for one moment here, and we are going to get started. Thank you. Hey everyone, you got Mike Marshall here with Brent Slava. Today we're going to talk a little bit about how to short a stock, some of the things to look for, some indicators. And like I said, my name is Mike Marshall. I'm on the sales and product team over here. Brent, if you wouldn't mind introducing yourself.
Hey everyone, thanks a lot for joining. Brent Slava here. I'm one of the trusty guys over on the Benzinga News Desk who is pumping out a ton of headlines, ingesting a ton of other sources, trying to give you only the most pertinent information into your Benzinga Pro newsfeed.
Excellent. Anything that you want to start off with before we dive into the content here?
Let's see. So we're going to be talking about how to short a stock. The sort of answer to that is you call your broker or you get a hold of your broker. So we're kind of like jumping to the last slide. But we're going to take you through all the steps. We want to prepare you for shorting a stock, like what kind of research you're going to be doing and stuff like that. Wanted to mention that I'm not certified in any way, so we're not giving you like recommendations here or anything. We're trying to give you some education. I have been doing this stock market news thing for about 10 years now. I've got a little bit of information over those 10 years, but I'm definitely no huge expert on shorting, just trying to give you a practical take on some basic stock market information here.
Excellent. Appreciate that, Brent.
Yeah.
So we are going to go ahead and just get started here. As you guys can all see, the title here of today's webinar is just how to short a stock, a guide to make better bets on the stock price.
Cool. So Mike's going to be taking the wheel here, kind of driving us through the PowerPoint presentation. I'll be kind of going over some of the bullets. So number one, why would you short a stock? Well, what shorting is a bet on the downside. You are a lover of Apple items, you're an Apple fanboy or gal, and you want to go long shares of Apple because you think it's going to, going to be the first $1 trillion company in the world. That's called a long. You're long when you are buying a stock. The other side of that is a short. And a short, again, is where you're bearish on a name. It's when you want to play to the downside on a stock. And we are operating in a zero-sum market here for stocks, for equities, that kind of thing. So there's always two sides of a trade. There's somebody that's buying, there's somebody that's selling, there's somebody that's long, there's somebody that's short. Pretty basic description. Let's go to the next one here, Mike.
Excellent.
Okay, so what is shorting a stock and how does it work? So this is kind of fun. I like sort of getting into explaining this a little bit. So technically how shorting works. So I'm going to walk you through this. It's going to take a few minutes, but bear with me. It's going to be some good information. I promise everyone. So let's say you want to short a stock. And again, this is kind of, we're sort of jumping to the end of presentation here, but you want to short a stock, you get a hold of your broker, you call him or her up, or you go to your online platform, you open your account, and you start shorting. What actually happens when you short a stock? Well, your broker at all times has this thing called a street account name. And what the street account is it's basically sort of like this holding place for a bunch of issues. Your broker, at whichever broker you're using, they already own a ton of shares of Apple, a ton of shares of Western Digital, a ton of shares of Alibaba. When you call your broker and say, hey, I want to short Alibaba, what happens technically, actually, behind the scenes, is your broker will go out and start selling the shares of Alibaba that they already own for you. They start shorting Alibaba at $100, let's say. You want to play the downside in Alibaba. So you ask them to short it, they start selling the shares that they already own. If your bet was good and the stock starts moving lower, instead of paying back your broker for the amount that they sold, all you have to do is pay them back the shares that they sold for you. So that's where your profit comes in, because you're not actually returning to them the value of when the stock was at $100 or whatever. If you wanted to short 100 shares at $100 and the stock fell to $90, you wouldn't owe them the $100,000. You would owe them 100 shares and you would make $10,000 in profit shorting the stock. Pretty cool, right?
Yeah, absolutely. That was a good definition of how to understand how to short a stock. If we do have questions coming in, one of our favorite listeners, Eva, I'm sure will be peppering us with some. So looking forward to that. Thank you for joining us.
Let me go over one more quick little thing on how shorting works. So to have a short account, you need to have margin opportunity. And what margin is, basically, it's not exactly like this, but this is a quick way to think about it. Margin is really credit. So if you want to start shorting stocks, you first have to go through the process of being approved by your broker to be available for a margin account. And what you're going to have to do that is, if you didn't, it's a little bit more stringent than if you just open a normal long account. You're going to have to go through a couple things. Maybe your broker will have to look at your actual account to see how much money is in it. They might want your bank account to be attached, so that if you have to, if a bet goes bad, if you're making a short bet and it goes bad, what can happen is you can get what's called a margin call. And basically what it is if you're shorting a stock, your broker is acting as a source of credit for you. If that bet goes in the other way and the stock goes higher, they might ask you to pay them up on that credit that they gave you, and it does cost you. It's not 0% interest. You actually will have to pay a little bit over how much you put in your investment, and that is like a really important thing to note. One of the most important things to note if you're thinking about shorting a stock is that. So let me give you a little example here. Let's say if you are long a stock and it goes bankrupt, it goes to $0. You put in $10,000 into this company that happened to go bankrupt and it's now at $0. You've just lost $10,000, right? That's the most you can lose on your investment. However, if you're short and you are playing the downside and that stock starts moving against you and starts moving higher, there is literally unlimited upside that can happen in that name. So if you sort of have to inverse it. If you're shorting a stock and you want it to go down, the most you can make is if the stock goes to $0. However, if the stock starts moving higher, you can get, $1,000 in upside before you know it. And I'm being a little bit dramatic here to make a point, but I hope that was able to kind of capture, I want you to be cautious out there. If you're going to look at possibly shorting a stock, there is definitely more risk in shorting a stock than there is being long or holding a position in the stock.
Excellent. And so if I'm hearing you correctly, it sounds like, we did the example of if you short a stock, say a $100 stock, the stock price goes down to $90. You gave us that example. But if you short a stock and the stock price is at $100 and it moves up to $110, you're not only paying for the difference, you're also paying a premium, correct?
Yep, that's kind of the quick and easy way to think about it. Yep.
Okay, great. As far as visual examples of shorting, thank you for the question, Jonathan. We will kind of show you a little bit of examples of how to look at some indicators here in just a little bit, but I am not sure if we have some direct examples?
Right now, just focus on what I'm saying and, kind of the prompts that are here on your screen. Like Mike said, we will get into a couple examples a little bit later, so stick around with us, Jonathan, would appreciate that. One more quick thing that I wanted to explain, and this is probably going to be like our lengthiest slide, just a quick heads up out there. If users out there, if listeners out there have heard of something called a short squeeze, I wanted to explain it really quickly. It is important. We're going to talk about it a little bit later. So what can happen is you can use tools out there to find out how much short interest is currently out there on a stock. So for example, if I'm trying to think of a heavily shorted stock right now, let me see. I'm thinking about a company called HIMAX. It's ticker HIMX. So we can use a tool out there. One that I like to use is called shortsqueeze.com. We don't have right now capabilities on Benzing Pro to show you how much short interest is out there, but it's something that we're definitely working on. You can use a source like shortsqueeze.com to see how much short interest is in a name. And why that's important is, so the nature of a short, right? When you start a short, you're effectively selling shares. When you want to close out your short position, you have to buy the stock back for your broker and then deliver them the shares. So the upside is an enemy of a short seller, and buying is an enemy of a short seller. So kind of how the dynamic works is, if you have a stock that has very high short interest, if there's a positive news item that is going to drive the shares higher anyways, and the short sellers in that name start getting freaked out, they want to remove those positions, what they have to do is buy the stock back. So it's bringing on added buying pressure to a stock that's already moving higher. And this is what's called a short squeeze. And this is very important because there is, I'm sure a lot of you know out there, if you're just getting started investing or trading, there's something called headline risk, which is, basically you see a concerning headline, traders will shoot first and ask questions later. If there's a headline that looks concerning, they'll just remove their positions. And if it's a short, they actually have to buy the stock back. So it will, again, start moving even further higher. A quick warning on short squeezes and, how it sort of can impact the price of a stock.
Great.
Cool.
Thank you for that explanation, Brent.
Cool. How are we going to get you some targets for short positions? So this is where we're going to kind of bring in the Benzinga Pro platform. It's what Mike and I are really excited about. This is what we're working on all day. Mike is on the, kind of accounts management and customer service side of things. I'm more on like the content and news side of things. And this is what we love to do. This is what we're doing all day. We're going to show you a couple quick examples of how you can find targets using Benzinga Pro. And then we can maybe look at a couple examples here. So why don't we start out with the screener, Mike? Screener is probably a really good way that I think you could, get some ideas on stocks that you might want to look at for shorting. And, don't make any hasty moves here or anything, people. When you see a candidate that might be a good short candidate, start your research. Start doing your research. Don't make a snappy decision. Don't make a hasty decision or anything like that. And it looks like we're having a little issue here loading the screener. See why? Yeah, why don't you give it a quick refresh, Mike? And if not, then we can pull open our news feed and we can look at a couple of headlines that might have generated some possible short interest. So come on, short screener. It looks like it's working. I haven't had this. I use this thing every day. I use this thing on a daily basis, and I haven't seen an issue like this, Mike. So maybe we need to get the developers on this one.
Yeah, absolutely.
This is unfortunate. I'm sorry about that, ladies and gentlemen.
Yeah.
But if you know what a screener is, I can at least walk you through it. This should be working in a few minutes, but we don't really have a ton of time here, so let me just walk you through this really quick. So how I use the screener to think about, okay, so Mike just opened a news feed over on the right. We still got the screener over on the left. And how I would use the screener to get some ideas about shorting is, what you can do with the screener here is you can sort by the biggest movers of the day. So what the screener is showing you is, the largest price movement. You can adjust the price that you want to filter by. You can adjust the market cap that you want to filter by. If you only want to trade small cap stocks, if you only want to trade big cap stocks, you can take this little screener here, this little slider, and you can slide it up, and now you're only getting, you know, companies over $50 billion in market cap. You can go the other way, and now you're only getting small cap companies. And so how I use this is I would probably turn on something like a gainer. I would hit this little gainer button right here. And now what the filter is going to be showing us is only stocks that are up sharply over whatever the interval you set is. If it's the last 24 hours, you can click this one. If it's more recently, over just the last 30 minutes or 15 minutes, you can click either of these boxes. And again, these are stocks that are going to be up recently, sharply up recently, potentially. A stock that has moved to a daily high or a 52-week high, there's sort of naturally some candidates for potentially shorting it. But again, don't make hasty moves. You know, do your research, do some homework, check out the chart, see if there's any important technicals at play, etc. Over on the left side here is our newsfeed. This is the Benzinga Pro newsfeed. This is where headlines are being populated in. These are breaking, real-time headlines. A news item breaks, you're going to see a headline within a matter of seconds on Benzinga Pro. You're also getting Benzinga.com content on this platform. Benzinga Pro is kind of like strictly a headline. You'll get maybe like a few word to a 20-word headline that will break out the most important information for you. A Benzinga.com article is where you get more details. It's where you can, you know, read paragraphs and get a little bit more explanation, a little bit more color on stuff. So this is very important, and I'm going to guide you to something specifically in our category button here. Click that category button up there at the top, Mike, and what I want you to go to is our rumor feed. So our rumor feed is probably one of the top categories of news that showing you stocks which might be ripe for a short position. So what we do in this rumor feed is we are tracking, you know, a bunch of other publications. We're tracking Bloomberg, Reuters, Dow Jones. We're tracking social media. We're tracking chat rooms. And what happens in some of these sources is, you know, chat rooms, for example. The chat rooms, there's sort of these trader communities, people that are chatting about their trades in a chat room, and what will pop up sometimes is potentially sort of this coordinated effort to drive a stock higher or lower. And these will a lot of times come out of a chat room. Despite the reputability of the sources in the chat rooms, they absolutely move stocks. And a lot of times they move stocks very quickly and in a very aggressive manner, meaning you'll see a lot of parabolic moves when you hear about some of these chatter. They're called chatter rumors. And so a stock might move higher as people buy into that, but as sort of the sources revealed, the stocks will a lot of times come back down. They might even trade lower from where they were when that rumor was first heard. So if you're looking for some candidates for potential shorts, I would definitely direct you to the screener to see if there was any stocks that had recently moved sharply higher. And I would also direct you to our rumor feed here, where a lot of times some of these rumors that do make headwind with the stock moving higher, if it's a positive rumor, a lot of times they do come back down as people sort of like digest the news a little bit.
Excellent.
And then I mentioned one more thing real quick. I mentioned one more thing earlier in the last slide, and that was shortsqueeze.com. It's probably like my favorite source right now to quickly find out what a short position, how much short interest there is in a name. And Mike is, I think it's SQUEZZ.com. Let's see what happens. I don't think you spell it right. Get rid of that E, one more. How do you, let me type it. I don't know how to spell it out loud. I just know how to type it. Short squeeze. There we go. That's it. Shortsqueeze.com. So I would recommend this. What you do is look at. So we're at VMware right now. The short interest is about 27 million shares. Short as a percentage of your float is about 30% on VMware. That is a massive short interest, ladies and gentlemen. I'm actually really surprised. I didn't know that VMware had such high short interest, but this is a very high ratio. If you see a percentage around 10 or 15%, that's kind of like getting into a pretty high level of short interest. One that I'm thinking of right off the top of my head is like Herbalife. A ton of controversy on this thing. Look at this one's actually got 40% short interest. That's very high. So just know if you're looking at a possible short in a company like Herbalife, just know that there's already a lot of people out there shorting. I'm sort of giving a hat tip to the if the masses are already in something, maybe you missed a trade. I'm kind of thinking about that here, and also know that there is a definite short squeeze potential, which could drive shares potentially, maybe inappropriately higher than they need to be, if that makes sense. All right, let's go back to the PowerPoint presentation real quick. So number 4, who should be shorting stocks? So if you are just getting into trading, you're gonna want to utilize shorting. You're gonna want to be able to play both sides of price action. You don't want to be able to just go long. You also want to play the downside. It's creating, the entire other half of your strategy potentially. But I will warn that shorting is definitely a higher risk instrument to use, a different tool to use, higher risk tool to use. I gave you a couple warnings on it before. If you are not quite to the trading level yet, if you're still sort of like an investor with, like a 1 month or a 2 month time frame, shorting might be for you, but just remember that you are sort of like dwelling in the higher risk realm. I would warn that if you are an investor who doesn't have a ton of discretionary spending, I don't know that shorting would be for you. If you are okay with losing money on a position, shorting might be a better target for you. And especially, like for a swing trader, like somebody who might take home a position overnight or over the weekend, something important that I mentioned previously was headline risk. And what do I mean by this really, really quickly is like, let's say you are shorting shares of Dollar General. Dollar General, it has its own news cycle, independent of everything else. However, if there is some kind of, like serious geopolitical something that happens over the weekend, or if, Hurricane Irma happens and it's worse than expected, the entire market is going to move potentially in the opposite direction of you. So that's kind of like a quick little definition of what headline risk is. Why don't we go to the next slide, Mike, real quick? And I did sort of like explain this one already.
And I guess I got a quick question on shorting stocks.
Sure.
So, you've done a great job explaining it. I guess the one question I have is, the longer that you're in the short position, is it almost the more risk you're enduring?
That's a really good question. I want to say no for this one. The longer you're in a short, the more risk you're enduring. Well, maybe I want to say yeah, because again, it's headline risk. It's if you're extending your time frame, you're sort of opening yourself up to potentially some more headline risk. So yeah, I think that's probably a real possibility, Mike. And like I have shorted more than a few stocks, just sort of like anecdotal evidence, my own trading. It's pretty darn nerve-wracking. the couple of times that the few times that I shorted a stock and held it overnight, I basically was up. I don't think I even ate dinner on one night because I was just like watching my stock. I was like so eager and anxious and sort of nervous that there was going to be news that I wasn't planning for. And you're definitely taking on a lot more risk. I definitely would warn you that you're probably going to feel a little bit more stress when you're shorting the stock.
Okay, excellent. Appreciate that.
Yeah, for sure.
And Richard, one of our listeners, appreciate your input. He believes that, of course, you add more risk the longer you're in it. So appreciate that.
Cool, awesome. Thank you for that, Richard. Appreciate it. So what is your discretionary budget? I sort of touched on this one a little bit, but if you are somebody who is moving toward retirement, if you're somebody who is planning toward retirement and you aren't certain how much extra cash you might have, that's non-discretionary spending, stuff that you absolutely have to spend your money on. If you don't have a ton of discretionary spending, a large discretionary budget, then maybe shorting isn't for you. If you are somebody that's younger, Mike and I are kind of younger guys. We have, maybe a little bit more leeway on where our money is going to be in the next 5 to 10 years. We're probably like pretty decent candidates for potentially being a short seller.
Great. And then we did have another question pop in, and it's a little more related to the timeline.
Sure, yeah.
Is there a time limit to how long you have to stay in a short position? And appreciate that, Hannah.
Really good question. So if we're talking about equity, no, there's not. Excuse me. If we're talking about some kind of derivative, like maybe an option or something like that, if you are playing the downside on an option, like if you are a buyer of puts, the time limit would be the expiration of your option. When that option goes off the board, you're basically going to want to either get out of it before, sell it, or execute your shares. So just to read it one more time, if it's equity, no, there isn't a time limit. If you're using some sort of derivative, there potentially could be a time limit. Whatever the derivative is that you're using, just do a little bit of research on it first. I'm sure you'll be able to find a quick couple answers on if you have some sort of like time limit.
Excellent.
Cool. All right, give me the next slide, please,
Yep.
Mike.
And if there's any questions on the next slide, feel free to drop them in.
Great. So the importance of knowing news when you're shorting, and this is where we can, sort of get back into our Benzinga Pro platform. And I've talked about this a little bit already. It's headline risk. The headline risk that is created by exposing yourself to a short really can be the thing that you don't want, especially if you already have a lot of risk in your portfolio. Headline risk can, make the entire market swing sharply higher or lower on a given day, especially in this market that we're operating in, where President Trump has access to Twitter at the drop of a hat, and he might, make some crazy comment that his administration maybe didn't want him to do, maybe didn't want him to make that comment. He sort of has access to it. Headline risk right now in the marketplace is like a very real thing. I've been watching, the news cycle for about 10 years. I've seen the Great Recession back in 2007, 2008, 2009, and I would probably say even more so than back then, we have greater headline risk potential, and a lot of that is related to the sort of political environment that we're in right now. Let me see here. What else I got jotted down? Also wanted to highlight to everyone, why it's important to consider news when you're shorting. Well, I want everyone out there in the audience to consider who you're up against if you're shorting. So if you are shorting, it means that you are potentially battling other shorts out there. A short seller is a lot of times probably more so likely going to be a trader. They're going to be somebody that has a shorter time frame. With that shorter time frame, they're also going to be much more vigilant of price action, of news flow. I'm sure everyone's heard of the idiom buy and hold. A long-term investor can buy a stock that they believe in. They can let it sit there for a few months, for a few years even, and not worry about it too much. However, short sellers out there are absolutely hyper-vigilant. They are tuned into as many news sources as they can. They want to know if there is something that is going to be impacting one of their shorts right away, so they can potentially get out of position if they need to. This is basically who you're putting yourself up against if you want to get involved in shorting. So another quick little warning. I got a lot of warnings here in this presentation. I think it's a prudent move, but definitely shorting is absolutely a large opportunity. You just have to, get a little bit of knowledge on it, pick the right candidate, do your research, do your homework.
Jonathan wants to know, is shorting almost media driven?
That's probably not a bad call. Yeah, I sort of like how you put it there, Jonathan. I'm trying to think about this here really quickly. I want to give you an example. It is, just sort of like, I would kind of agree. I think it's sort of like a perpetuation a little bit. I'm sure if any of you have invested or traded out there, you sort of can see sometimes even the dissemination of news. And you can sort of see that it gets out there to maybe only a few funds or traders, and the stock is sort of moving a little bit lower or a little bit higher, and then all of a sudden you start hearing more people about it and more longs jump into a position or more shorts pile into a position, it starts driving it down further or higher. I think I would sort of agree that it is a little bit media driven. Yeah, it's not a bad call, Jonathan. All right, so let's get you with a couple of examples here. We're going to actually use Benzinga Pro platform, and ladies and gentlemen, I want to be as relevant as I can. So I'm going to give you a few examples that are like potential shorts this week. And again, not making any recommendations or anything like that here, but excuse me, do want to offer you some opportunities. I know that there have been a few traders just today who have chatted in to our platform and said, hey, you know, I acted on this rumor and I made some money on the long side. Some of our smarter users out there at Benzinga Pro will use some of our headlines as an opportunity to put a stock on their watch list. Maybe they start tracking the chart for a little while. They're watching the levels that are happening in the chart, and maybe they're thinking about a short position and they're waiting for a good opportunity. And as I've said before, a good opportunity could be when a stock moves pretty sharply higher. We like to call it a spike higher, when a stock spikes higher. So let's take a look really quickly at ticker STI, Sandy Tango India. It is SunTrust Bank. It is like a regional bank. So at the same time, Mike just clicked on the ticker there. He clicked right there on that STI, that red STI. He's pulling up a chart over here. This is the one-day chart, and let's check this out real quick. And so Mike's sliding over the pane a little bit. So check out this headline that hit at 11:20, about 11:22 today. So there was a report coming out that said that the SEC has charged SunTrust Bank with improper recommendation of higher fee mutual funds. So Mike, now what I want you to do is I want you to go over that right pane, that's the details widget, and I want you to mouse over this guy right here. Mouse over, let's see if we can get a little time frame. So look, we had this headline, ladies and gentlemen, about 11:22. The bar, the 5-minute bar, about 4-minute bar that Mike is moused over right there, the stock was a little bit over, it looks like 55.33 or so, about 55.23, and look what has happened to the stock since then. And even that, when we go back to that bar you were in, look at this big candle, this big wick in this bar, and that is this like extension down here. So what happened in SunTrust as that headline hit is that the stock actually fell to well below 55 bucks. It looks like it fell to about 54.80 or so, and then it sort of bounced back, and then it sort of like drifted lower. What you would have had here is if you seen the headline, you were like, whoa, anything with SEC charging, I don't care what it is, I don't like that, it's probably going to be bad news, at least over the very near term, and you started shorting it, you would have had, about 20 to 30 minutes or so before the what looks like could be the low of the day would have been in the stock. So when you see this kind of, concerning headline related to the SEC, related to the FTC, related to some other regulator, it could be a good opportunity to think about possibly shorting in the next little bit here.
Excellent. One thing that you made me think of when you were talking was the ability to do keyword searches.
Sure.
So I was going to type in up here, SEC, hit enter, and then type in charged and hit enter.
Oh my gosh, that's a great idea. We didn't plan this, ladies and gentlemen. This is just Mike thinking on his toes here. So he's searching a couple keywords here. And do you have you don't have the rumor thing on? That's fine. I think this will work. So let's see what happens here. Search in SEC, search in charge, and
I got to give my computer a restart. So
yeah.
sorry here, team. It's working on it. It's thinking about it.
But I mean, you can see, there you go. You can see right in that SunTrust headline, it's the word SEC and the word charge. So it's going to reveal to you, if we can ever get your computer to work here, it's going to show you only SEC. It's going to show you only charges. Look, we got a SEC story on Amazon here. We got a SEC and charging story related to, Citigroup a little bit further down. You're not getting a ton of results here, but maybe that's what you want. Maybe you don't want a ton of results. Maybe you want, some pretty limited results that the Benzinga Pro platform returns for you. So on sort of the topic of, like investigation charges, that kind of thing, the story that has hit us over the last week or two, which is, you know, drawn a ton of attention, even from the Main Street, not just Wall Street, is on a credit company. It's Equifax. So if you have ever done, you know, an application to get a home or to get a apartment property, you probably used one of these credit rating services where they sort of classify your credit. Equifax, just over the last week or so, has had these major allegations that there is, you know, some kind of like fraudulent activity, some kind of like data breach. Excuse me, not fraudulent activity. They had a data breach over, I think, a week ago or something like that. So I want you to type in the ticker, Mike. It's EFX, and let's sort of see how this is played out. And if you don't mind, if you think your computer will make it work, let's try to open a details page here. And I want you to switch to the 1 month. You're going to be able to see it in the 5-day, but I really sort of want to focus in. Look at the, you know, consistency in that stock. Stock was trading, what, about 140 or so for quite some time. And then, you know, we get these allocations, or we get this confirmation from the company that there was this very large data breach. Company said that it affected like 150 million people out there in the United States. It's almost half of the population of the United States. Immediately after we first heard about this, the stock fell to, so stock was trading about 142. Mike, will you give me a mouse over? I want to see what this little price is right here.
123.
So right away, very next day, stock fell about 20 bucks. Since then, it has fallen under the all-important $100 level. A nice round number like 100 bucks is very important. Stock's currently trading, we go over to about 95.80 right now. So this has been quite some downside. And again, it was the situation where, you know, right when you hear about data breach or you hear about, you know, some kind of investigation, which has only come this week, it sometimes can be an opportunity to start shorting something. And I want you to just, Mike, will you just scroll back in the news feed a little bit? So get us to like the first headline.
From all of this?
So like, well, I think you went too far back. Keep going up a little bit. Let's see. Okay, so here, this was, looks like the first Benzinga.com story that we had. It was, you know, what you need to know about the hack. And this was on, it looks like the 7th. Actually, scroll down here to September 7th. So these are the first headlines that we got here. This was, I believe, the company had to issue a press release that said, you know, we had this pretty serious cybersecurity incident. About 209,000 credit card numbers for U.S. consumers were actually breached by some kind of like hacker or something like that. That was a major concern. I want you to scroll back up now, Mike, because what we're getting today is we're getting these regulators coming out and saying, you know, this is very concerning for consumers. We have the Senate Democratic leader, Chuck Schumer. He came out today. He said, you know, Equifax must take several steps by next week, including reimbursing consumers for credit monitoring and allowing credit freezes. If they don't take steps by next week, within the next week, he is sort of like demanding the company's board, the CEO, maybe the rest of the board, step down from their positions. That certainly isn't going to help the company. If their whole board has to step down, there's going to be some, you know, serious shakeup there. There's going to be some serious uncertainty in the name. So this is something that I know a lot of traders have been looking at for potential short right now. But just to keep in mind, the stock is down, you know, something like 40 bucks or so in just a few sessions. So I mean, that already is kind of a lot of downside. I think it's like 30% or something like that. The stock has fallen in less than a week.
Excellent. And we are getting very close to wrapping up here. So we are, you know, pretty much just doing the finishing touches and answering any questions that have been coming through. So, there's a question of what would we do in, you know, personally in this situation of Equifax.
Great question.
Personally, I think it's going to, you know, continue to go down a little bit. You know, just from the news that came out today, I would be surprised to see them get everything in a row by next week. I know that there was, I believe I caught a rumor that there was some insider selling about a week or two before all of this came out. So
no, like, resolution to that yet, anything, Mike, just to, like, say that, you know, we don't know if that's going to have any implication in it. It doesn't seem too good, but who knows what can happen. something to think about, Jonathan. Jonathan asked, you know, the stock's bound to come back. Absolutely agree with you on that one, Jonathan. However, what you should be considering is you're probably not the only one who's thinking that way. And, you know, the saying goes, you want to move against the crowd. You don't want to be doing the same thing that everyone's doing. So that's where sort of a contrarian might say, you know, well, Equifax is down a ton, it's bound to come back. The contrarian might say, maybe the majority of the market right now is saying that it's bound to come back. So maybe they're like in the position where they still feel like they should be shorting it. Just to give you a little context there, Jonathan, really good question. And yeah, and Jonathan saying, you know, there is only 3 of these agencies. There's Equifax, there's one called TransUnion, that one's TRU. If you don't mind real quick,
Yeah,
Mike,
let's check it out.
pull up that ticker over in our right side pane here in the details widget.
TRU?
TRU, yep, TransUnion. Go back to that, is this the month that we're looking at? It is the month we're looking, oh, there we go. So look at that downside, and this is what is known as a pure play. So when you have a, you know, couple companies that are very close together, they're in the same line of business, if one is impacted negatively or positive, it's pretty likely that another one will follow. And this is the other publicly traded credit agency like this. There's Equifax, there's TransUnion, and there's one called, I'm forgetting it right now. I can't remember what the other one is.
I think it starts with an E.
Experian, I think that's what it's called.
That's not publicly traded. Yep.
That is not publicly traded though.
Yep. So, yeah, I mean, I think it's, you know, I didn't look into TransUnion before this. I guess, you know, the pure play does make sense, but I'm kind of surprised they're not kind of gaining a little momentum.
Well, it's really a concern for this entire like sector. Like if you say that, you know, TransUnion and Experian and Equifax are sort of in this small sector together, if like one of the bigger players is having really serious issues with, you know, data security, etc., it might be a very big concern for the entire sector. And, you know, like there's an excellent trader that I know that is the host of our morning show, Benzinga's Pre-Market Prep. It's premarket.benzinga.com. One of our co-hosts, Joel Elconin, he has been a trader for, you know, 20, 30 years. I'm channeling my inner Joel here, and if Joel was looking at this trade, I bet what he would be doing is he would tell us it was the SOH trade. I mean, sit on hands. So why he says that is because there is just so much risk in these names right now in Equifax and TransUnion that he isn't even ready to mess with that risk. He doesn't care if he could make $100 million betting on further downside or $100 million trying to pick a bottom here. There's just so much risk right now that he isn't even ready. He doesn't even want to, you know, justify taking that risk. He's going to be looking for other opportunities. So I think, you know, Mike, I think we kind of like made the case for sort of a bounce in Equifax. I think we've sort of made the case for Equifax potentially moving lower. We've also given you sort of like a neutral case trader who, you know, doesn't want a ton of risk, who thinks that this is a very high risk setup right here, and it's so risky that they don't even want to mess with it. Maybe Joel would be watching this trade, you know, maybe he'd be watching Equifax chart, but he's not going to be putting a trade on because it is so risky.
Excellent. A couple other quick questions that came in. So do you think it would be a good idea to track the short interest of Equifax and then buy when the short interest goes down?
That's a really good question. That's a really good idea. I'm not going to give you like a direct answer on this one, KK, but I want to point that you are doing absolutely the correct research here. You're getting to a point, you're sort of like, you know, bringing in all this information, you're processing it, and you're getting to a sort of strategy for yourself. And maybe you're going to go out and use some tools like Benzinga Pro or like shortsqueeze.com, and you sort of like, you know, make this case for your strategy. We've had a couple webinars over the past couple weeks where we were saying, you know, it's very important to keep records of your research. I think, you know, you sort of consider the news you're seeing on Benzinga Pro, you're considering short interest on shortsqueeze.com, and you're sort of like putting it all in a chart in front of you, and you're going, okay, here's all the information I know right now. Can all of this information get me to a potential strategy? I think you're exactly considering the right things here, KK.
Excellent. Thank you. And then I'm not sure if you're educated in the interest fees.
This is a really good question, Susan. Susan's asking, how much does the short does the interest fee add to a trade? I don't have an answer for you right now, Susan. Let me get your contact info. I'll reach out to a friend who will know this, and I'll get you an answer on this before the end of the day, if that's cool with you.
Yep, so Susan, I will try and get Brent your email address. I believe if you signed up with your email address, we should be able to pull it, no problem. So we'll try and follow up with you by the end of the day. What else do we got?
So we got a good something here from Richard. He's saying, he's a big short seller. The challenge is definitely hunting for short setups. He really liked the SEC charge idea. We got just a few more minutes, Mike. I do want to go over just like one more really quick thing. I want you to go over to our newsfeed if we got time. Do we got time?
We got time.
Yeah, just a couple more minutes. I want you to type in ticker Juno. J-U. Oh, the screener's back. Thanks, Andrew. So type in ticker JUNO. We can take a quick look at the screener after this. So here is a specific example of something I touched on. We talked about our rumor feed. This rumor in Juno today, it was something that came out of a chat room. The chat room chatter was that Celgene, another big pharma player, ticker CELG, might be looking at the company. Why don't you pull up the chart on Juno, Mike?
Okay.
Do you see? So Mike's typing in Juno over there. So we're going to be fine with the 1 minute chart here. So look what happened in Juno. So look at that big green bar right at 11 o'clock. We posted the headline that said, traders are circulating chat room chatter of takeover interest. That was at 11:02. And this bar that Mike is highlighting over right now is showing us a 4 minute span, 11 to 11:04. Stock did move higher, and it even continued a little bit higher, over the next half hour or so. It did move a little bit higher. But look, it started coming back down. It's actually lower than it was prior to where when the rumor started hitting. And again, I'm going to say it again. We don't understand the reputability of some of these sources. However, that might not matter if those sources are doing some kind of coordinated effort to make a stock move higher. So, like I said it before, some of our smarter Benzinga Pro users out there are using this feed. Maybe they're making money on the upside quickly and taking a profit. Maybe they are waiting to try to decide when a stock might hit its high of the day, and they might look to short some. So I'm trying to give you a couple more ideas here, Richard. You might have been able to capture some downside on this Juno if you were looking at a short. I would definitely tune into the rumor channel on the news feed. Don't make any hasty moves. Get familiar with how we're publishing the headlines in that rumor feed. I want you to be comfortable with the headlines before you make any kind of, moves on it. Okay, cool. And let's see if the screener's back here real quick, Mike. If you don't mind, close that detail page. See if the screener comes back, just so we can show it to you really quickly. We're not going to go too much into it. So click on this little applied filter.
Well, if we're going to think about short, should we go just with the losers?
Let's go with the gainers.
The gainers.
Yeah, let's go with the gainers. So these are stocks that have had a ton of upside just today, and this is like just for me looking at it, these are like pretty minimal upside right now. A lot of times when I look at the screener, the top will be like, okay, there we go, that's a little bit better. So like Top Ships, it's like a dry bulk shipper. It's a very volatile sector. Stock's up something like 22 cents today. It's a very small company. It's like a penny stock. It's only like a $10 million, that's volume, 10 million volume company. Stock's up 60% today. This might be a good short candidate. However, the thing that I would say is I would bring up that short squeeze again. Remember that, a stock that has a lot of short interest, a stock that's higher for a day, could have added upside pressure if people want to get out of their short positions by having to buy the stock back.
Excellent. And you can see some pretty interesting news here. Class action suit.
Ooh, actually, so good point, Mike. I would warn everyone, especially if you're considering shorts, look at this news item that Mike is moused over right here. So you just double click, you pop open a press release. It says the Klein law firm reminds investors of a class action suit. People out there are going, oh my gosh, a class action suit, that's never good news. However, we get these things all day, pretty much every day. There are, basically the sort of insensitive way to put it is like if you've ever heard a lawyer be referred to as an ambulance chaser. It's an insensitive way to say it, but these firms here, They basically look for opportunities. Maybe there is, some weird trading that happens in a stock. Maybe there's an M&A deal, etc. There will be a million of these press releases that we get. Look, there's 2 in a row right here on your newsfeed over on the right. There's Klein Law Firm, and there's also Glancy, Prongay, and Murray. They're doing this class action suit. I need to warn you that these class action suit press releases, they do not move stocks. So I'm really glad you said it that way. You're like, oh, this is really interesting. A warning that, don't freak out if you see that kind of press release. You'll probably see a lot of them. Again, they generally, like 90% of the time, they do not move stocks. Don't let them freak you out.
Excellent. And, if you guys are liking what you're seeing here with the Benzinga Pro platform, you guys can go to this URL right up here. I'll drop it into the chat, and you guys can sign up for a free trial to it. So feel free to take it for a test drive if you guys want. Myself or someone else on the team will probably reach out to make sure that you are able to get all set up with it in order to kind of leverage your investment style. Brent, what type of stuff do you want to add?
I don't think anything. We just went through a ton of stuff. We do these webinars Thursdays. We always do each week Thursday. This is probably like one of the longer ones, so it looks like we've kept a lot of the audience around for almost an hour or so here. Want to thank everyone for joining. When we come back with our webinar next week or over the next couple weeks, they're probably not going to be this long, but a topic like how to short and giving you some tips on looking for short targets, it's going to be probably one of the sort of like more lengthy, more complicated things we can get into, at least for this level of education that we're at right now. So, for next week, if you're interested in tuning in for next week, just a little bit of a warning that it's probably not going to be quite as long.
And, if you guys are enjoying some of the content that we are delivering, we did mention the pre-market prep show here. It is live every morning from 8 a.m. to 9 a.m. Eastern Standard Time. And you guys will notice right down here, there's a chat room that goes on.
Yep.
So if you guys have any questions on a specific stock pre-market, you can always drop it into the chat bubble here on Benzinga Pro to get direct access to Brent and his team.
Yep.
Or if it's, 8 to 9 in the morning, I would challenge every one of you guys that are listening to at least tune into this one time, and I guarantee you will start looking forward to listening in. But you guys can drop in these questions, use your same email information as your pro account, and it's a pretty tight-knit community.
Absolutely.
And dedicated following that follows those guys. Dennis, Dick, and Joel Elkanan have been amazing educators throughout some different universities, and they definitely will give you a lot of great free knowledge that you can use to improve your investment strategy.
And there is, like you said, Mike, there is this community that lives in this chat room, and they will pass ideas around. They'll say, we have a couple good traders. We have more than a couple good traders in there who will say, hey, I just, started shorting this company. I just went long this company. They'll compare their trades. They'll get ideas from each other. It can be a really good resource for people that are looking for trade ideas out there.
And, I think it's very, very, undervalued as far as of the listeners. Today we had Gene Munster on. I don't know if you guys are familiar with Gene Munster, but he is, the top Apple analyst, covers Apple, Tesla, pretty much will keep you informed on all of that information, what's going on, why it's moving, and everything. So it's definitely a treat to listen to these guys. They all are recorded, and
Yep.
You can find previous shows and listen in if you guys are on like the West Coast, or if that is just too early.
Yeah, and Richard, the resources that we gave you in here, if anybody out there, if we were moving a little bit too fast and you do want to go back and listen to this webinar is also recorded. So you can tune in to this webinar. You can, scroll through. If there was a minute where there was something you missed, you can scroll through to it. Also, Mike and I have been doing these webinars for quite some time now. And, the last week we talked about when to buy and sell a stock. The week before that, we talked about some very basic research. How do you start researching a stock? You can find all of those here. They're really great resources. We spent a lot of time, a lot of effort. We got pretty good response from it. Pretty basic education, but if you're looking for some good stuff to start out your trading or investing career, we feel this is a really good resource for you.
Absolutely. And then you'll notice on the link that I just dropped you guys, you can sign up for the next webinar right here on this page. This Market in 5 is a morning newsletter that goes out. Take advantage of some of the free resources we have to offer, and take advantage of all the resources that are out there on the web. Make sure you guys are doing plenty of research before buying and selling. And just to say it one more time, none of this information was intended for you guys to take action on any stocks. We are just trying to provide some information and some content to kind of what we're seeing in the market and what the type of feedback that we hear.
Great.
Excellent. So Brent, really appreciate you joining us again today.
No problem.
All the guys that are listening, guys and gals that are listening, thank you guys very much for being dedicated listeners. Anything that you want to sign off with?
Go Zing or go home.
Yeah. See you guys next week. Thank you.